Hi, welcome to Let's Talk Bonds, the bond market podcast from INR Bonds. I'm Arjun Patsati. And in today's podcast, we are going to touch upon a very important topic for the bond markets and bond investors and bond traders. And also how the market looks at change in control of an issuer. Now, the the biggest aspect here is that when say a company is promoted by an ex promoter, and then for whatever reason that promoter exits and somebody else takes over, and when the original promoter was running the company and it had a rating of say X, and the new promoter comes in, then the ratings can change. And also, in the same breath, the markets, as we all know, that are way ahead of rating agencies. And in this sense, if you take the bond markets, what technically happens is that, say, the bond market comes to know of a change in control by a stronger promoter, then here the bond markets tend to bring down the bond yields of that particular issuer, and the bond prices tend to move up. So we have a lot of M&As happening in the Indian economy at this point of time, and it's happening every day. Investors would benefit from understanding the change in risk. It could work both ways. One, it could work in positive way, and it could also work in negative way as well. So investors should be aware of both aspects in all the bonds that they are investing in. And it could also be a very key metric for some of the portfolio managers if they want to create alpha into their portfolios, in bond portfolios, by looking at this kind of a metric and identifying certain issuers that have the potential for upgrade in bond spreads due to change in control, or or even exiting few that have the potential for downgrade in bond spreads. Now, let's get back to the podcast. And before that, investors should be aware that bonds carry credit risk, which is default risk. That is, uh, the company can default and you will not get the capital back. Interest rate risk, prices can go up and down. And liquidity risk, the cost of buying and selling can be very high. So change in control is defined as in a very stock market regulatory sense that an entity that is acquiring a certain stake. Here in India, it's over 51% stake of a company, and anything over 51%, and they signify their intention to be the promoter, then it means that the promoter of that issuer has changed. Now, let's take three cases which have been pretty prominent in the markets recently. One is this is on the downside when HDFC, the bank, had sold off its education lending arm, Credila. So there, the rating agencies downgraded the bonds from AAA to AA, and largely due to the fact that HDFC as a promoter is seen as the highest safety promoter, which is AAA rated. But the moment it went out of its hands, the rating changed, and bond yields too when the of Credila bond yields of Credita, which were at one point of trading at very fine spreads given its HDFC parentage, now then started to trade higher at higher spreads, and yields also started to rise, largely due to the fact that investors' demand came off on the back of the rating change and change in promoter control. Now there is this other case of CapSafe. CapSafe was acquired by the Japanese bank, and which is a AAA entity, and the rating was upgraded from AA originally to AA plus to AAA, and from the bond spreads which were trading at AA levels suddenly shot up, came off very sharply, to trade at AAA bond spreads levels. So here, the investors who had invested in CapSave at higher yields and at AA rating spreads were rewarded by holding on because there was change in control by a very strong promoter and the rating agencies to upgrade the bond to AAA, and the spreads have come off very sharply. And the third is Sonata. Sonata is a microfinance company which was rated in the triple B category, and Kotak had acquired that 100% acquisition of Sonata. The moment Kotak got RBI approval, the rating moved up from triple B to A category levels, and also the Kotak also what Kotak did was called back all the bonds that was outstanding by Sonata Finance. So issuers, so investors too, had invested in a triple B paper. Now, the moment that control change happened to Kotak, the risk became Kotak risk, which was triple A, and investors too benefited from their investments because they didn't have to hold on to a company which could potentially have still been the triple B and gone through a microfinance crisis, etc. The moment Kotak came in, the whole scenario changed for control. We have other few other examples that are floating in the market. One and very recent, I mean, the most in the news is obviously the government of India looking to take control of Vodafone. So Vodafone bonds at one point of time after the merger with Idea uh, cellular and the all that issues facing telecoms, their bonds were trading at pretty much at default levels. Now, with the government of India coming in to relieve the stress on Vodafone, and trying to make sure that there is no duopoly in the market from with the Geo and Airtel, and trying to also use Vodafone to merge with BSNL and upgrade its own telecom network to provide the third competitor in the market. Now, the moment if Government of India does assume a promoter control stake, then the credit profile of Vodafone completely changes now, and then the risk of the investors, bond holders, become a Government of India risk. This is yet to happen, but this is something that is on the cards. So markets are definitely looking to play in this kind of a scenario for this particular company. There have been others as well in the market recently. You had Indostar, where it went through a lot of issues, and then Brookfield came and took complete promoter control over that. The moment Brookfield came in, the rating was upgraded from the A category levels to double A minus levels, that is double A category levels. And bond deals too came off, bond spreads too came off. And so clearly the markets were gave a thumbs up to Brookfield taking over the promoter control and um, and giving comfort to a bond investors. Then the others are including Bain, that has got approval to invest 18% in Manappuram. Now, Manappuram has a subsidiary which is Ashirwad Microfinance. So with Bain coming in and showing its intention to to be a very key partner in Manappuram, and maybe going forward take up a creeping acquisition. We don't know this. None of this is out in the market yet. Manappuram is a listed company. So all these are publicly available information. So then the credit risk profile of Manappuram is anyway a very strong company, but the credit risk profile of Ashirwad, that also can change if Bain is showing very keen interest. Um, then you have the Fusion Microfinance, which went into a lot of issues due to heavy losses and net worth was wiped out. But then they came out of the rights issue, and Warburg Pincus took over, participated fully in the rights issue, and took its stake higher than 30%, and that's adding comfort to bond investors there. And while there's been no great movement in ratings of bond deals at this point of time, but at least investors are comforted that there is a strong backing to this company, and they have liquidity to service their debt if things don't go worse from here. And the last is lending card, where Fullerton, the global Fullerton Financial Holdings, the Temasek arm of the Temasek subsidiary, which is AAA rated globally, that took over lending card. Here too, lending card had gone into liquidity issues, but then once Fullerton came in, the whole scenario was changed in terms of credit risk perception. So what it effectively tells you, especially bond investors, is that that there are very specific cases where there could be change in promoter control. Now, one could be stress case. Now, stress case is here clearly, if you take Vodafone idea, is a stress case. Government of India taking over. That is, they don't want that company to go down, like, very largely due to the fact that they want a competitor in the market. And those would be stress case scenarios. Then there are obviously all these stressed assets companies that are going into the that are going into stress, and there, if they are taken over by a very strong entity for whatever price they pay, right? So that there the fresh credit risk profile is based on the new promoter rather than what it was earlier. But obviously, those invested in the stressed company in bonds, they may not have realized their full capital back, but it may be a part of it due to it's going into liquidation and getting a new promoter on the back of it. So all this definitely what it tells bond investors is that a change in promoter control is a very important event for for bondholders, and they would need to understand whether the risk is positive or negative because of the change in control. Now, most of the times we find that when it's an M&A, then largely a stronger partner acquires a weaker one, so that is positive. But then at the time of investing in the bond, the bond investor would have looked at potential cash flows, how the company was performing, governance, etc. But when that didn't happen very well, then they could have seen the bond yields rise sharply, prices go down, they cannot sell the bond. But when there's a so at that time, if they are watching out, if a new bond investor is seeing that there is some good opportunity to be had in a stressed bond, and if there is some indication um that a new promoter could come in who with much stronger profile, then those are opportunities to be had. But also there are cases where, like, Credila, HDFC Credila, where by regulations they had to reduce stake in that company, and there, because of that, they had the credit risk profile changed to the worse, negative, rather than on the positive side. But it's not that Credila is not we cannot come back to AAA. That very largely depends on how the new promoters work the financials and balance sheets, etc., and all that. So it is definitely lucrative for investors to identify potential bond issuers, where the promoter is very strong and has just taken over. Rating agencies may have taken time to react and change ratings sharply, but bond markets are much faster in what they perceive on their perception. In all cases, whether it's bonds or equities, they are way ahead of any kind of lagging indicators of others. Hence, uh, where there's and if there is enough and if there is enough juice left in the spreads, once the control change in control has happened, then investors can definitely look at such investments. But obviously, there are some cases where it may not be fully promoter. The 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 change in control may not have happened fully, on the cusp of it. But there's a level of risk that is there. Investors need to understand, because at any point of time, the even if a new investor comes in and takes a significant stake, but not a promoter stake, and then suddenly something happens and they decide they cannot invest further, then the whole scenario changes. So that risk is always there. If it were to be clearly cut over 51%, then I think the risk perception of the bond changes significantly. So investors should can definitely look at such opportunities in the market, and obviously they need to do their own due diligence, or work with their closely with their financial advisors to make sure that they are identifying the right targets for their investments. Thank you for listening in, and do follow us on all podcast channels for such kind of educative and knowledge sharing podcasts, which could potentially help investors to improve their returns on their portfolio as well, and keep their risk down as well.